Scott Wren. He's a senior global market strategist at Wells Fargo Investment Institute. And Scott, when you take a look at the potential, the rising tensions, I should say, between the U.S. and Iran, the potential economic impact it could have on the U.S. economy, how big of an impact do you think it can have?
Well, it all depends on what happens to the price of oil. So let's say something very unlikely happens, like the Strait of Hormuz is shut down for any length of time. Global oil prices are going to go up. Gasoline prices are going to go up. That means U.S. consumers and consumers really in many parts of the world are going to have less money in their pocket to spend on discretionary items. So that's how the economy gets hurt. Expenses go up for businesses, whether it's airlines who have probably actually hedged most of their fuel usage out over the next 12 months anyway, but some businesses would be negatively affected. That's how it's going to hurt the economy if something like that happens. In our opinion, it all comes down to how high is the price of oil going to go.
Scott, has this at all changed your outlook in terms of the U.S. economy and for the markets in 2020?
You know, it hasn't at all. At least we don't really see a reason to change it. Our year-end 2020 price for West Texas Intermediate is $55 to $65. So, we've seen oil sell off a little bit here. We're moving towards the middle of that range. Really, I don't think the U.S. consumer is going to be affected unless that gasoline price goes up, like I mentioned. So, the bottom line for us is we're expecting modest growth. We're expecting modest inflation. We don't think the Fed's going to make a mistake. Don't think there's a recession, or at least a very high probability of one over the course of the next 12 to 15 months. So we've been trying to stay the course. We want to lean a little bit cyclically. We like tech. We like consumer discretionary. We like financials. We don't want our clients to get too defensive. And I feel pretty good that that's going to be our outlook as we move forward.
Scott, with the trade deal, you're saying that you don't want your clients to get too defensive. Is now the time to maybe add some risk to a client's portfolio? Just because even though we do have these geopolitical tensions, trade at least seems to be progressing in the right direction.
It does, and I'll be honest with you. We'll probably have maybe a mid-single-digit total return this year. One thing where we could be too conservative, we didn't think this trade deal was going to come together this soon. Now, did we expect some huge trade deal? No, we didn't. But we thought there was going to be more tensions that would last longer. So we get something signed here on the 15th. I don't think we'll hear much about phase 2 in 2020, and so I think that's bringing down these trade tensions is important. Certainly the market's been pricing that in. That's one of the reasons why we're run up here to the level where we're at right now. And also I think some of the news from abroad is starting to improve a bit. And I think those two things combined, you throw in a little chasing from people who have been underinvested. That's why we're at 32.50 or awful close to it.
Scott, do you think as it stands right now that the market is overbought in terms of U.S. equities at least?
No, I tell you, really, last year we thought the market was, our target for year-end 2019 was 30.30 in the S&P 500. So, we finished the year better than that. So, for us right now, stocks are a little bit ahead of fair value, but they're not super expensive. They certainly aren't cheap. So we would say stocks right now are pretty close to fair value. And this year, in addition to those other things that I mentioned that could be positives, one thing it's hard to gauge, we've seen a little bit of chasing so far in this run we've had over the last few months, not a lot. And if we get a lot of chasing, the market has some upside on something like that could take us, beyond really fair value. And sometimes in other cycles anyway, taking us well beyond fair value.
Scott, what about the fact that there's still some uncertainty? We talk about the rising tension between the U.S. and Iran. In terms of volatility, do you expect an uptick in volatility in 2020?
Well, I think it's safe to say that with the presidential election coming up, market not paying attention to it now, but that'll change in the summertime. These Iran tensions likely to not go away anytime soon. I think that we're going to have some bouts of volatility, but for us, our macro outlook is good. It's not great as we look ahead. So all else being equal, I think if we see some pullbacks here, the 200-day moving average is almost 10% below where we are now. And, 10% pullbacks happen pretty regularly, more than once a year on average. So I think we'll be looking at that as an opportunity should we see some pullbacks that are meaningful.
Scott, what do you think the biggest risk is to your projections in 2020 at this point?
Well, I think one thing is that this international growth does not pan out. And so if we see Europe really slip from here, if we see this emerging market growth that looks like it's stabilizing and maybe improving a little bit, if that doesn't pan out, that's going to be a real problem, I believe. I don't think we're going to see anything in terms of the Fed making a mistake, but I would think that global growth is the biggest risk as we look down the road.
All right, Scott Wren of Wells Fargo, thanks for joining me.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.